Welcome to the No BS Short-Term Rental Podcast, an unfiltered look into the global vacation and short-term rental industry.
I'm Mateo Bradford.
And I'm John Stokinger.
And this is our podcast. We bring the right people to the table at the right time, giving you an inside view and take on the short-term rental industry like no other podcast can.
Morning, Mateo. How are you?
Fantastic, John. How are you?
I am good. I got a little sun down in West Palm. I'm back home and, took the carriage from the airport to the house, up here in Indiana.
But the question is, were you wearing your shorts and flip-flops? Like I heard you were running around Miami and running around VRMA Executive Summit in shorts and flip-flops.
Hey, not the whole time. I did bring two sport coats that I did. You know how I roll, but it was a reception.
Sounded like it was a new you.
It was a reception. It was out on the lanai, and it was nice weather, and had to do my thing.
John, we're in vacation. We work in the vacation short-term rental industry.
Yeah.
I think it's okay if you wear shorts.
It was okay. I closed some deals, so it's all good.
See,
that's what it's about, right?
Yeah, it is. Yeah. Speaking of what it's about, we have some great guests this week.
I'm excited. Yeah, season 2, episode 27.
Yeah.
I want you to go ahead and introduce guests. I want everyone though that's listening to please like our podcast, share our podcast. If you're on Apple Podcasts or you're wherever you listen, leave a review. Without, we do this for you, we do it for us, but without you and without that interaction, we're obviously we're scaling, we're growing, but we would really appreciate the love and support. So do not hesitate to go ahead and mash that like button. Isn't that what they say on the YouTube videos?
No, if you're watching on YouTube, like, listen, subscribe, do all those things, hit the notification bell at the bottom right-hand corner for us. And
my favorite, when they point to where you're supposed to do it, right?
Yeah, there you go. Anyway, awesome. Without further ado, we have some amazing guests this week. We have the team from Nectar here. We have Brittany and Derrick from Nectar, which is actually, I'm going to let them dig into it, but I was introduced to them through Andrew McConnell quite a while ago. Met them at VRMA, and they are doing some really exciting things around the investment side of our business. And we talk about that a lot. We talk about whether it's good, whether it's bad, whether it's middle ground. But one of the things that we do talk about is how it's changing the industry and how there's fresh energy, fresh blood coming in and changing how things are being done to, the world of financing around short-term rental real estate. And so I don't want to dig any further into this. I want to actually get them in and introduced. So Brittany and Derrick, welcome to the No BS Short-Term Rental Podcast. We're ecstatic to have you.
Thanks for joining us.
Thank you. We're excited to be here.
Yeah, thanks
right.
for the intro.
So so they're in ATL, as we were talking about earlier. Shout out to Atlanta. Give us we talk about we always start with the origin stories, and this is an industry that nobody was in school. Well, maybe now people are like, hey, I'm going to go to school and learn and focus on short-term hospitality or short-term rental real estate as it is a thing now, right? But no one was in school and with backgrounds like you guys was like, I'm going to get into this short-term rental hospitality real estate. So let's start there. I won't make you guys get into the personal side of your stories if you don't want to, but I want to know your stories of how we got to Nectar. How did you get to where you are today?
Yeah, we can. Yeah, I don't know. You want to kick it off, or?
Yeah, I can kick it off. So Derrick and I, we have different paths about how we got here, but we met in college. We were in the same freshman dorm at Harvard. And while we were at Harvard, we worked on a couple of student organizations together. And after college, I took a different path. I went to work in corporate retail at Abercrombie & Fitch in Columbus, Ohio. I'm also from Ohio, so it was cool to be close to home. But I worked my way up to running a $120 million tops business for Abercrombie & Fitch. And then Derrick.
Yeah, after I had a more entrepreneurial bug in college, started a few pretty successful organizations and started buying real estate actually, out of my senior dorm. and Leverett for all you Harvard people out there.
Hey, so quick side story. While you're sitting here investing in this type of things, I'm dropping out of college and being a snowboarder and selling, like, bags of weed on the side. But that's a totally different story.
That's better
and an old story.
Market, probably. You probably were making more money in the beginning. But yeah, I was doing that. Then I moved to New York and I worked at Goldman Sachs, where I was a fixed income trader. And that was great. Got a lot of responsibility. Also got to hang out with all the Harvard people went over to New York. So it was a great social part of my life.
I heard about that pipeline once or twice.
Yeah. But then I kept building a real estate business, and I'm from Southwest Atlanta. And Southwest Atlanta was pretty hard hit by the financial foreclosure crisis. So my neighborhood, you just drive around and they're blighted, zombie looking apartments.
Yeah.
And I was like, well, if I'm in this business, I might as well do something. I was the first person from my high school to go to Harvard. I felt like I should not be sitting up here in New York. I should go back and figure out there was a disaster. There's an economic disaster. Someone needs to come home and do something. So I started, turn my business into basically a flipping business. We buy the crappiest, blighted, most messed up apartments in the neighborhood. We kick out all the gangs. We gut it, make it the nicest property in the neighborhood, and did that. Started asset management business to do more of that. It grew pretty quickly. We got to about 500 units, and I left Goldman 2013. And yeah, that's how. And then Brittany joined forces with joint forces in 2016.
Yeah.
By that time, I was doing a lot of bigger apartments, but we had all this deal flow for smaller properties that I just couldn't manage. And I just there's a lot of things I just needed help with. And Brittany jumped on board and she started running our small properties. And so that was our entry into short-term rentals. We were like, we have all these properties, but you can't pay bills with properties. And they, you have to, and you're trying to, so we're like, how do we get more cash flow? And then, that's where Brittany was like, well, we can do the short-term rental thing. And so, really, she was pregnant with some child, and she was our second child. And you're like, well, this is the time I'm going to start a short-term rental business. In that year, I think we went from 0 to 11 properties, short-term rentals, the first 9-10 months. But we owned the property, so it was a little bit easier.
A little bit. You don't have to deal with the homeowners because you are the
more control. Yeah.
Well, no, you had to deal. You had to deal with homeowners.
I'm sure they had some issues.
I get it.
Right. You're not managing. Yeah. It wasn't you're managing for other people within that space. With John is going with that.
Yeah.
So it's from Southwest Atlanta. Where'd you go to high school, man?
I went to 2 high schools. Started out at Mays High School.
Okay. All right. That's what I was looking for.
And I graduated from Westlake. So both
2 excellent schools.
Yeah.
2 very excellent schools in Southwest Atlanta. I went to Morehouse. That's how I actually got to Atlanta. So I know and have lived in Southwest Atlanta for some time.
Yeah, I know tons of people who went to Morehouse. And also, Morehouse got me into the entrepreneurial thing because they volunteered. Some kids from Morehouse volunteered at my middle school, actually, and taught about science and technology and all that stuff. And hey, 20 years later, I'm running 25 years later, 30 years later.
20, man, you went to the numbers, brother.
You don't have to take your notes. It's all good.
But yeah.
So that's a fantastic model and way that you came into the industry, came into short-term rentals. I can only imagine the issues that you had within the space, learning how to cash flow the business. How did that parlay? How did that turn into Nectar?
Yeah, I mean, really. So for us, in order to do, when I joined the team, we were doing smaller deals. And in real estate, in order to grow and scale your portfolio and do larger deals, you have to take on additional investment. Mm-hmm. And so, and we would take on an investment from LP partners.
And when Brittany says smaller, she means $2 million.
Yeah.
Thank you for that clarification. That's not where I was going with it. That's not where my mind went.
So yeah, so we would have to ask it, basically go to investors and say, hey, we have this really awesome deal. Will you please give us the money in order to do the deal? And investors are great because they give you the money, but then they also take most of the profits. Mm-hmm. And so for us, We just got really tired of that rat race. It was awesome because we were scaling, we were growing our portfolio. I think, I don't know, what's the most number of units we had in our portfolio?
The most number of units ever is like maybe 4,500.
Yeah.
I'm sorry, did you say 4,500?
Yeah.
That's what I thought you said.
And,
Okay.
and these are multifamily, correct? They're not all short-term, the short-term rental. You're doing multifamily stuff, because I'm looking at both of your on LinkedIn right now, and I show that you're still doing your Domos co-living on one of them, and then Greenwood co-living on one of the others. So you're still running these not behind the scenes. They're still very talk about that too, and how, because Mateo mentioned transitioning to, Nectar, but it looks, at least on LinkedIn, it's looking like you're not fully transitioned. You're still, or maybe you're doing two.
I'd say we're mostly transitioned. For Domos and Greenwood are doing awesome things. Love those companies. We fortunately have great partners that we work with. We've sold a majority of our assets. We sold pretty much all assets with third-party partners except for one.
Yeah.
So, anything that we have partners on, we pretty much sold. The things that we own it. It's like,
Right.
It takes the pressure off. But we have great people running it. And Domos is, also continue. I have a partner, Daniel Alexander, doing great things there. They're still building. But yeah, so I think Brittany is the only one actually who, does this stuff. How many units you got going now?
We have about 70 co-living beds.
Yeah.
Okay.
Yeah. That are here in Atlanta.
Yeah. And maybe one or two short-term.
We have one short-term rental. Yep.
Yeah.
That's right on that
So
line.
pretty much you're fully transitioned. This is just kind of keeping.
Yeah, we have an awesome team in the background that literally runs the show for us, which allows us to focus all of our time on Nectar.
Yeah.
Now that John didn't interrupt, now we can go back to the Nectar story. Thank you, John, for that comment.
I need clarification.
We basically got, we were in the rat race. We were we call it the real estate rat race, where you get all your money, you put it in a property, and then you upgrade it, and and then it's you have the struggling phase where it's not cash flowing, it's cash flowing, then you refinance it, or you sell it and take all that money and put it in your next property. And you're just going from asset to asset, and big down payment to big ass down payment.
Right.
And if you're growing, then, you make money, but you use that money to continue to grow. And we were like, this just has to be a better way. It has to be a better way to not have to have all of our net worth tied up in these properties. And so we sold our properties and started Nectar to empower real estate entrepreneurs like ourselves. Because in the crisis happened, the pandemic happened, and we were at a point where we had this portfolio of cash flowing assets. But investors didn't want to give us money. Lenders didn't want to give us money. The bid ask spread was wide in terms of where people were selling and where we wanted to buy. And so we were like, look, if we want to close on these deals and keep growing, we have to get the cash from somewhere. So why don't we just leverage the cash flow coming off our current portfolio? Let's turn that into security. Maybe we can sell that security. And it was great. We sold it in a week, because it turns out investors love cash flow.
Imagine that.
And then we had a big lump sum of money. It was wow, this is great. We can buy another property, or we can invest into a business that just does this for everybody and unlocks this kind of liquidity for everybody. And that's what we decided to do. And we had a ton of interest. We got into Techstars. We had huge wait lists. We sold, and that's where we're going to sell our properties. We're going to put cash into, effectively putting money into the real estate entrepreneurs who are creating the built environment of the future. All of these people who are out there on the grounds working, making things happen to actually turn, create the experiences that we all experience. You know what I'm saying? They're actually doing the work, and they should get the upside. They should own the property. They should have a financial system that works for them instead of works against them. Right now, we own dozens of properties and couldn't get a mortgage to buy our own house. You can't even get. They don't,
because it's not liquid. It's asset, and they look at it differently.
Yeah. So we're that's a problem that just doesn't make any sense. So that's why we decided that we'd rather spend this next leg of our career focused on Nectar, in supporting other entrepreneurs as they scale and as they grow a portfolio, and we can help with cash. And we've done it before, so like it's great to be on this side of things, where we can both advise and just finance, because a lot of people don't need advice, they just need the money.
Right. So you can consult and you can go ahead and give some cash flow and some liquid into what they're trying to do. With my quick question, but I know Mateo's chomping at the bit here. The question is for you is, you talked about investment is this, but then you went ahead and sold all your assets, right? So is this 100% bootstrap then, what you all are doing right now? Or are you also looking to investment to scale this? Or then you're getting right back into that rat race again, right?
It's not 100% bootstrap.
Okay. I was curious because
it was in the beginning, but now we did just end up closing our seed round last month.
Congratulations. Yeah, that's awesome.
Yeah, thanks. That's just a little more than a month now.
Yeah.
But yeah, I mean, ultimately what we saw, we have capital, and we were, investing in giving people advances, but this is a capital intensive business.
Yeah.
And the demand is just there. There are a ton of awesome entrepreneurs out there. And we want to be able to have the heft and the wherewithal and the team to be able to actually solve problems for them. And that just takes more cash than what we are willing to invest ourselves. We want to make sure that we're, our cash is keeping us.
Your cash, you got it. Yeah. No, I get it.
So we raised some capital, and then also, so we give advances to real estate entrepreneurs on their future cash flow, on the net cash flow that they're generating, or fee income that they're generating. We see that there's cash flow coming in, we'll give you an advance, 1 to 5 year terms. You can get a good lump sum. And then we take those advances and then we turn them into financial products that we sell to investors. So we don't have to fund it all off of our balance sheet. Investors can buy these financial products that are backed by the advances that we make to real estate entrepreneurs. That makes sense.
Smart.
Amazing. That's because it's, we know, and, I'm sure, through your time with Andrew, we talked to you about our experiences of rent to capital and what went to rent to, and what we found out, with the idea of paying fixed rent. We found out that property managers, they liked the idea, but they really just wanted the money to scale and grow their business and grow their portfolios. And there was no real there were no other options out there at the time outside of, traditional debt financing, or, if you are savvy enough to play in the VC world or investing world, it was just, those were really your two options outside of bootstrapping yourself. And, it's interesting talking about the advisory services around helping them, because a lot of time these managers, they want the money. In wanting the money and having a plan to be able to build a cash flowing asset that's actually viable are two very different things. And it's the theory versus application of it, right? Yes, we want the money, but how do you use the money that you're able to get? And how is your business actually set up from a structural standpoint to be able to handle the success and grow? And, essentially hit the KPIs and the other targets that you're going to need to be successful to continue to cash flow and continue to grow. So how much time do you guys actually spend educating property managers? And do you look at the structure of their businesses, how they're set up? Because in this space, I think what we've seen, especially over the past couple of years, a lot of companies didn't make it. A lot of managers didn't make it. A lot of managers are not here anymore. A lot of companies aren't here anymore because of that simple fact, right? So talk to us a little bit about how that works, with Nectar, and what you guys do to prepare, your customers, your clients for success.
Yeah. I'll take this in 3 stages. One is, we are focused and primarily for experienced operators, like people who we've been there where it's in the beginning and you're hectic and everything's crazy and you're trying to learn and trying to, and that's all great. And we can support in lots of different ways, but not with cash. Right. So frankly, the product is for people who are, experienced entrepreneurs who have a business in place. they've done their first few and they're ready to go ahead and scale. They have their feet up under them.
Yeah. So by experience, and just for clarification for those that are listening, is this somebody that has, 2 or 3, or is this is a professionally like a host that has 2 or 3 properties and are willing to scale? Or are you looking like, I'm a property management company that has 10 units and I need an influx of cash? Like my assumption is it's more of the at first, hey, we've done 2 or 3, we flipped, we're going ahead, we're pushing to Airbnb, where we've just reached super host status, or we're about to. My assumption is that's who you're, not someone that's 100. Hey, I'm looking to get into this. It looks like a great way to make some money and it looks fun. That's obviously not who you're looking for there.
We're looking for them like after 2 or 3 years of strain and struggle.
Yeah, we're looking for the battle-tested entrepreneurs that have at least like 2 to 3 years of experience and have been in this, like 2 to 3 years of rental experience, and understand the challenges that the short-term rental business has.
Yeah, and that can be whether if you only own 1 or 2, or if you manage 10, or like we're in terms of like how big you are, we have solutions for, we've done deals with people with 2 units. We've done deals with people with 1,500 units. So it's more about, do you know what you're doing than how big is your portfolio?
Well, and again, John, we can look at how many managers that had sizable portfolios and companies that have sizable portfolios that are not here today, right? So
100%.
Right, it's interesting when you have that conversation, right? And I hate to use the house of cards kind of analogy, but the reality of a lot of companies that are not with us anymore suffered because of that example, right? Like
you're saying it like you've been through like a war or something.
but to them it was, right?
We have a lot of fallen soldiers out there.
There's been some, I mean, it's and not some little ones, there's some big armies that fell down.
No. And that's the thing.
Yeah.
And we look at, like, another thing is we look at your financials.
Right.
So like we're going to like, we want to see that you have experience, but then we're going to just look at the books and just the cash doesn't really lie, and we'll see, and we'll we like to see like that you have, at least 4.5 stars, you're a decent, or super host status. We weigh all these things, but the number one criteria is, how long have you been running an actual stable cash flowing business? Mm-hmm. Like, what can we see that you're actually cash flowing?
Right. You're looking at track record, and you're right. Dollars don't lie. You're going to be able to follow it one way or another.
Yeah.
And I'm sure that your perspective of looking at it is very much so different than other financial institutions because of your experience within the space. And I guess my interest around that is, how are you guys are creating a culture of like how to look at this differently, because I talk to managers a lot. I'm a manager myself. And when, you talk to people who are looking to scale their business, and the financial institutions that they're trying to work with don't understand their business, right? They don't understand what to look for. They don't understand, really what they're looking at and how to appropriately build relationships with those companies. So oftentimes they either put them in really bad products, or they give them, or they just flat out deny, working with them. They can't figure this out. So,
or give absolutely horrible advice.
But in that case too. So I see this as a cultural shift, and I guess I want to look at hear from you guys of like how you guys, what impact you guys have seen and what impact you guys want to have on the broader community in terms of helping this industry get better financing deals and help managers, get better products, to the market that are going to enable them for success.
I mean, I came up from a background on Wall Street where you have companies that have all kinds of creative and innovative ways to get cash on their balance sheet so they can grow and expand. And that gives them an advantage over smaller companies, which, by the way, a lot of these smaller companies might actually have better products or might actually have better service. Some of the big companies, I mean, just because you're big doesn't, like, for instance, Time Warner is a huge company. Comcast, mm-hmm. do you love their service? There's, but you get benefits of incumbency.
I do. No, I'm just kidding.
Maybe so. I don't know. You have better, better luck than us.
Here in Fort Wayne, they're
right.
No, just kidding.
But we want to be able to apply financial innovation to solve the financial challenges of real estate entrepreneurs. So we want all the knowledge and mind share out there. We want to take all of our financial and real estate experience and apply it to how do we use data and technology to solve the financing challenges of real estate entrepreneurs in a way that's favorable to them so they can keep their upside. They can get more of the benefit of the work that they do every day.
And making it accessible too. Like on top of it, like that's where like some of this, there's so much money out there that they're trying to go ahead and just like force into this industry, but it's still not accessible to most people. Even if you have good books, even like you need to have the right connections, or you need to look a certain way, or you need to go ahead and walk walk a certain way. And, and I love that. I love what you're doing and making accessible to, and I don't want to say the common folk, but like I want to say the hardworking people that want to go ahead and do this the right way, and they have books to back it, but it's still not accessible to everybody.
Yeah,
and I think like in terms of like talking to like our customers, that we have now, really in talking to them, I think like one thing that really sets Nectar apart is that so many times as a short-term rental entrepreneur, when you're going out and talking to these lenders, they're trying to find ways to figure out how not to give you money. Where like here at Nectar, like we understand what it means to be a real estate entrepreneur, to be a short-term rental host, and we're trying to find ways where we can work with you in order to give you capital up front so you can grow and scale without like taking on any sort of equity. So like for us, what's important is really like empowering this generation of real estate entrepreneurs to truly scale and like maintain and keep ownership of their company.
Yeah. One thing that we know is that the future is not going to look like the past. The way that we use space is different now than before. And the future business leaders, the people who are going to create that future, they are not the same institutions. And so what we're doing is we're bringing, institutional quality financing options so we can turn this industry into an institutional quality industry without having to give up everything like the business, without having to live, without having to come through it the way we did, which is, we might have had, sold a $20 million property that we owned 2% of.
Right.
So yeah.
Looks great on paper, but what does it actually mean, in the end of the day? I have a question or a transition to what you said. You're talking about, how you compare to some other, with the differences you are. So I want to ask, are there other comparable, who do you look at as competition in your space, or do you 100%, see yourself apart from them because you're offering it a little bit differently? And then the caveat to that, or like part two of this question is like, what does Nectar like not do like 100% wonder? Like, what can you get better at?
So people who are like, there are companies that are very close, similar to us in other spaces.
Yeah.
So like Clearco, like Pipe, Wayflyer, CapChase, FounderPath. There are a bunch of companies for SaaS, or e-commerce companies. There are a bunch of like alternative financing for them. In the real estate space though, is not, you have like your uncle, a lot of who are running up against. It's like, oh, well, my parents will give me money at 10%. So that's been most of our competition, to be honest, is people's parents, really, not joking. But those are the other people in other industries that are similar. But we're trying to,
like within the real estate industry, like we're the first ever like platform to provide cash flow based financing.
Yeah, that's not, it's not a mortgage. We're not putting another mortgage on your property. We're giving you cash flow based financing that you can use to, you have your 2% mortgage that you got a few years ago. Your property's looking a little dingy now. You need to, upgrade the cabinets, put a pool in there. Boom, here's some cash. Do the things you need to do. Don't give up any ownership. Don't have to refinance that 2% mortgage that you have. Keep it moving. Or, you have a couple properties, they're doing well. You want to go get your next property. You don't want to sell the things you have. Well, boom, we'll give you some cash, put up a down payment on that next, on the next property. So like, again, typically that's been the domain of equity investors. And a lot of equity investors are not accessible. You have to know the guy. For me, it was like, I'm from Southwest Atlanta. I had to drive to Buckhead and find, the people who were, who are going to cut the checks. You can go to our website, use nectar.com, whoever you are, from wherever, from whatever city, whatever part of town. If the numbers are there, then we'll give you the cash. Like, it's that simple. It's not about your network.
How did you decide that you wanted to be a platform versus something else? Because I think I want to go into this space where we talk a lot about how technology is changing the industry in vast ways in terms of like management and other aspects of the business. But I think this is fascinating because this is technology playing a direct role in changing how the money moves within the industry and how people can actually use the value of their assets and other things to grow and scale. When you were thinking of Nectar and thinking of how you wanted to be, where you wanted to be in this space, how did you come up with the idea of being a platform versus, just another banking tool or other, financing tool?
Well, we're looking at what works and what doesn't, and what the future is going to be. Like, we are creating the industry of the future and working with the industry leaders of the future. Are the industry leaders of the future going to mimic the industries of today? No, they're going to be different. What works is you leveraging technology to be able to, get financials quickly. So in real time, you should know what your financial performance is. So what we had to do is we had to get our property management company to send us financials 20 days after the close of the month. How are we going to, make decisions based off of that? Not taking any shots. I know.
No, as a manager who's in the process of getting his financials straight for in that 20-day period, I completely understand.
Yeah, I want you to be able to on Monday know how much money you made Monday morning by Monday night. You know what I'm saying? Like, we want you to be able to leverage all the financial data, your own financial data, to be able to make decisions. And we want to be able to make this, be able to offer you financing along the way. Without you having to apply and go through this long 30-day process and send back and forth about, real estate moves quickly.
Yeah.
Money should move as quick. And we can use technology and data to give you insights into your own business. And for us to be able to tell you, hey, this is how much money we can get you at all times. At all times, you have, this is how much cash you have available to you via Nectar. And you can't build that without technology.
100%. With that, you talked about, being able to get money quick. Someone that has their books in line, someone is running a fiscally responsible business that wants to go ahead and get, all the boxes are checked and they want to go ahead and get, some money, some cash flow through Nectar. How long of that process from point A, from when they start the process with you to where they can get money in their hand to go ahead and put that down payment or whatever they want to go ahead and do? What's if all the boxes are checked and there's no issues, how soon to the cash in hand?
Yeah, right now we can typically get people cash in as little as 7 days.
Oh shit. That's good. That's quick.
Yeah, we're trying to get that down, and it will get down over time. But a lot of these businesses are complicated. And we have to make sure that we're doing all the right things. But if everything is lined up, there's no reason. And if you're a repeat customer, there's no reason that over time we'll be able to do it quicker than that.
I thought 7 days was quick. Clearly, I'm out the loop.
That leads to my part B, though, that I asked earlier. Where can you improve? Like you've talked about, bringing it from 7 days, to shorter, but I'm sure there's, where do you see Nectar going, and what do you think that you can improve on as a platform, as a lending asset to the community?
We're a decently young company. So there are lots of places to improve. One thing that we don't do great is we don't work with properties that are not stabilized, where like you're buying something new and you're going to turn it into short-term rental, things where you don't have a lot of track record. That we're just not good at that. We're not. And we're not able to provide financing, even though there are good opportunities there. Instead, we look at stabilized properties, and you can use the cash to go and buy a destabilized property if you like. We're still, we need, in order to use data to make decisions, you just need a lot of data, and it just takes time to get. So, a lot of people apply, we'll have more data and we'll be better.
No, I know that data game, we're in the, I'm part of a very large company with Hopper, but the Homes vision is very much a startup. And we don't have the data we need, coming in for homes to do exactly what we want yet. Yeah. So I totally understand the data grab and needing that to be able to move fast and quick.
Yeah. Yeah. And I would say one other thing that we can improve on and are improving on is just like the time it takes to underwrite a deal. So just this week, we're launching our new Plaid integration. So now we can plug directly into our client's bank account. So it's much easier for us to pull the financial data that we need in order to get people a decision on how much money we can actually advance them up front. So, we're really trying to leverage technology in order to help us make decisions for funding much quicker.
That's awesome. It's these relationships with these different tech pieces in the APIs and making it work. And I bet your developers love you.
Yeah. But that's enough. And also, we are gonna get better at really, knowing the needs of all the people and find out where they are and where they're hanging out, how to reach them, and how to create products that really actually solve their problems. There are different players in the game. There are people who are managers, there are people who are owners, there are people who are owner managers, there are people who are owners and who don't manage, there are people who are arbitragers, and they all have slightly different needs.
Yeah.
Right.
And there's some people who are buy and hold, there's buy, renovate, and rehab and refinance. They're different types of business structures. People own a bunch of properties in one entity, people own a property in each entity. And if you come in and you're like exactly down the road of like what we figured out, then it's like way quicker. Like one day we know really what we're going to do. If you're slightly off from that, it's like, okay, well, we have to like build this specific use cases. This guy owns these and manages these, and there are a couple ARBs, and there's like, people come to us with crazy stuff.
I can only imagine.
And like, different structures and all that stuff. And so that's getting good at like simplifying and, all these different use cases and how people have things figured out like that. That's, we're going to get better and better at that.
It's just time. It's like we're playing a long game here, and this is definitely a marathon. It's not a sprint. But if you try to sprint, you're going to miss stuff. This is and I love that you're trying to you're looking into the future and you're seeing you see your roadmap. You know where you want to go, but at the same time, you're like, hey, we need to get better at this, and we need to understand our user, our guests, our client better. And it's again back to data. It's understanding, these, based on these criteria, this is, normally they're going to go into this, this funnel here. All right, great. We have a pretty good idea. All right, there's going to be some anomalies along the way, and then you're going to have to, all right, we're going to push them in this direction. But I love it. I love where you both are going with it.
Question for you and your guests maybe too. So like, what are the best ways that we can what should we be doing to really solve the problems of your business? Like you all, have properties and, we're managers, like, where, like, how is it, like a revolving type thing, term loans, like what, how do we know when you need money, and like, what are the ways that financing can be a tool that we're maybe not thinking about?
Great question. Number one thing you're doing right is, coming on our podcast. We appreciate you. Total shameless plug. I think, the first step is, when I think Nectar before today, I thought about the bed I sleep on, and it's like, it's not necessarily. So it's a branding thing. It's under, you need to get the word out. That didn't really answer your question. But I think by getting the word out and letting more people in the space know who you are, what you're doing, why you're doing it, which are all amazing, like the directions you're going with this is exactly what our industry needs. just by, putting your brand out there and getting more, like you're going to get more, maybe Mateo can answer this better because Mateo does manage properties. I myself am just on the vendor side I'm on my fourth company in the short-term rental space. So
I think it's different coming from a company like Rented that had rented capital, and, seeing, having that experience and talking to thousands of managers who are looking to, scale their business and want capital to scale their business. I think one of the most important things that you could continue to do is, how can you utilize technology to help people in sustainable ways, right? In ways that work well for them, that are truly going to help them with the goal of expanding their business. And that takes understanding their business. It takes listening and getting a realistic idea of where they're at within their business. And it sounds like you guys do a good job of that. So I think the answer to that question in shorthand is continue to listen to the people that you feel are your ideal customers, and build products that, are going to get them to success. Right. And, everyone wins with mutual benefit, right? Like how do you create the win-win? Create, something that's going to build the platform, build your business, but also build successful customer relationships, because those are going to be your biggest cheerleaders going forward. The more people you can help within this space, the more businesses you can help become successful and grow and scale within this space when others are struggling, specifically in this area. I think the better off you will be and the better off the company will be. And I think you guys are spot on using technology, thinking outside of the box, not doing what everyone else has been doing before, but finding new roads to, show success for your clients and customers. It's a no-brainer.
Now, to add to that, I think speed, thinking about it when Mateo was talking, I think, continuing with your speed to give money to those that need it, because we know how cutthroat this industry is. And if there's that one piece, there's one, in this market, there's this one home, there's, 4 or 5 people that are going to go ahead and want to bid on it, or 10 to 20, depending on the market, they're going to go ahead and bid on it. And if you can get, actually money in their hands to go ahead and close that deal quicker, speed's going to be a big issue, and a winning factor for you all. In 7 days right now, it seems pretty amazing. But, if you keep chipping away at that, if they have the right financials, that's going to help for sure. What's next?
A great question. I don't know that we get a lot of questions.
I love it. I love to turn the table on me. I was like, oh shit. Ask the questions here.
So actually, I got a question for you guys. We met in San Antonio at VRMA, and one of the things I always talk about, I didn't come from the space, right? And so every time, I always ask people, like, so what were your impressions like when you came into like the professionalized space of vacation rental management? Like, how was that experience for you? And, what was it, how did it turn out to be versus what you thought it would be? And, how did you, hopefully, just give us your feedback of what you think about the space. How was your first VRMA? How's your entree into the industry?
So I don't remember what the name of the speaker was, but he showed like a video of like him and his daughter dancing for like a minute that went viral. And I was not.
Was that Andrew?
No, I don't. It was some speaker, and I don't know, but that was not my expectation. I was like, it was gonna be like old people. I don't know. I don't know. I think that it was pretty, like, we've been in the industry. We've been in the real estate industry, mostly like multifamily. And it is not that different from what I expected, to be honest, because, we've been in it from that perspective. There's definitely like a younger generation that has like a different energy that's like really strong. It's like a big contingent of the vacation rental space. And then there's like an old guard that's like a big contingent. And it's like, I think those two are more balanced here than in like multifamily or in finance, which is where I was in before. So I think that's one thing that, was surprising, I guess. I don't know.
Were you surprised by the lack of diversity when you look over the crowd and you just see the predominantly white? We talk about this a lot on our podcast. We talk about diversity and equity and inclusion, and we talk about and we're trying to go ahead and help. We're both on DEI subcommittee. Mateo actually is co-chairs the committee on VRMA. We do a lot with this. Was that surprising to you, or was it expected? I'm assuming it was expected. But how, with your thoughts, I'd love to know how do we go ahead and bring the like short-term rentals and vacation rentals and investing in this and open this up to, or like just show how amazing this industry is to a more diverse and eclectic users and people. I probably didn't say that eloquently.
No, that's great.
It's real.
What I would say is that I was not surprised. And I come from the finance and the multifamily industry. They're not diverse either.
Right.
Brittany was in corporate retail, also not diverse. So like the places where people are making money are not diverse. Like, it's just kind of we have a history, a specific history, where like there are literally economic sanctions placed on the community, and that is just kind of how it is. And it takes a long time to, mix things up. One of the big things, and one of the reasons why we exist, like when I started my first real estate business, the goal was to create impact at scale. And one of the big issues is I was building in my community. There wasn't that there was a lack of demand there. It was a lack of capital there.
Lack of funding.
It wasn't a lack of know-how. There are people who worked for construction companies and knew literally how to build. There were people who worked for management companies and knew how to manage. There weren't people who can go to who our biggest competitor is, which is mom and dad, the bank of mom and dad. That's our biggest competitor at Nectar, people's parents. That they get in, a lot of Black people's parents don't have money, that just is real. And so that's one of the reasons why we started Nectar, not specifically to give money to minority communities, but just realistically, if we're giving money based off of your performance and not based off of who you know.
Right.
Love it.
Be something that makes
Thank
it so
you.
that it's more diverse.
Yeah. Who doesn't have that friends and family bank to draw down on? Yeah.
Exactly.
Right.
Exactly.
It's the same with hiring. It should be based on merit and credentials, not based on who you know and how you got there and whose ass you kissed on the way up. We see that all the time. Thank you for answering that question. It's interesting. It's like,
my answer to that question is always they're the nicest people in this space. It was weird because I came from retail, finance on that side. And I was just you're never going to find competing banks chumming it up with each other and hey, yeah, that guy's great. Our product sucks. Go talk to him. Or, hey, it was super cordial and super nice, at least on the front end of it. And
I'm sharing cliff notes.
Very
weird.
It's very
really
weird. I was yeah, it still catches me off guard a couple times, but it is hospitality at the end of the day, right? It is real estate, but it is also very much so hospitality, which is people driven. So, yeah.
Well, we appreciate you both jumping on and learning about how you got into this and learning about your mission and Nectar and we're going to go ahead, obviously. On the website, there'll be a link to Nectar. Use Nectar, is that correct? And usenectar.com. Yeah. Awesome. Yeah. We'll go ahead and have a link there. We'll obviously share it across all the social. But thank you so much for joining us. I learned a ton, and we really want to have you on in another year and talk about your growth, see where you're going. Of course, we'll bump into. I'm assuming you're going to be in Vegas.
I'm waiting for the invite to come work in Atlanta. I don't know about John. Don't worry about that. We can. We'll invite John.
I need to get down there too.
I take that back. John is actually coming to Atlanta, so
we're gonna have to throw some short-term rental parties down here.
Yes,
you know what I'm saying? We got Daniel. We got Andrew.
I got y'all.
We have a good contingent. We have.
Yeah, shout out to Jamie at RGA and everyone.
We
have a good community. Yeah.
All people who have been through the office.
That's awesome. Thanks again, guys. Appreciate you so much.
All right.
Thank you.